Hello, everybody. Today is the 12th of June 2026, and welcome to this market debrief. We did discuss the oil thing in the chat this morning. I was actually very late awake just to see how the open is going to be, and then I couldn't really uh, put the current price action into context. So I'm sticking to my guns here with what I know, and therefore I'm just gonna explain to you why we still can maintain our bias even though prices are coming down. I don't think this is still a case where we simply see oil going lower and just because president is making tweets. I don't subscribe to the idea that this kind of works. Even though we have been witnessing this over the past 3 months. So I get that. I get the frustration, and I'm frustrated myself that the price is not behaving as a free market should. But I guess markets go up and down in waves, and therefore I would also simply consider that to be the case as well. So this is a down wave that we have to consider, and therefore the prices are more easy to drive down by some bullish tweets, I suppose, or bearish tweets if you're a oil bull. The regularity of the cycle in oil is actually remarkable. Um, it's a 244-day cycle. I placed like a constant grid on it so we can study the regularity together. But I'm going to have to shift it left or right just so you understand it. Especially like if you took my course, then you know what I mean, and I won't use any terms that you might not understand. So let's just go with the concept, okay? So here's the cycle beginning, and this is the cycle low, all right? You can see it takes less to decline and then the uptrend starts. That's because of a left translation of the bear cycle or a right translation of the bull cycle, the bull phase and the bear phase. So bear phase is shorter, bull phase is longer. So that still checks out. So this low would be here. If you put that now into context, you will see if you start the next cycle there, you can see even more extreme right translation, and we find the cycle low there, which makes it for a longer cycle. On average, though, it's 245 days. You can see nice cycle low right there, right? Then we begin the up phase, and boom, here's your cycle low. You see here, again, lengthening, shortening, right? The new cycle starts there. So again, left translation of the bear cycle. Then we get this, right? This is the up phase, very weak up phase, extreme left translation, and now you have to come down. You're coming down, you're coming down, you're coming down. Boom. This is the low, because we can shift it here. You can see, kind of fits right there, right? So this is the low. This is a neutral cycle, as you can see. The starting point is the same as the ending point. No other thing. Then the new bull cycle starts. That is more or less a neutral cycle. We find a low again at the low point. Extreme left translation again. And then you commence into the downtrend, right? And this is where we land here. And then if I shift it there, you will see up, down into the low, right? This also works. So it also checks out. So we're here then, and the cycle is in length 245 days. So if I now visualize you that, that's an okay cycle. All right. We have time left. It's still until the August, and since this is a big cycle low, this is the intermediate cycle low. We should be expecting a left translation of the bear cycle. So if that is the case, let's just measure the left translation of that we know. It's just one data point in this current measurement, but it gives us a rough timing idea on what we can expect, right? So we should expect the same things. So from the end of this trend or the end of this projected low, we should be getting a low in the next 2 weeks. So I'm actually of the opinion that mid-June to early July, this should bottom, okay? And we don't consider anything bearish that can hold up above the 50% level, right? So if we put a Fibonacci, put a 50% there, you can see we're holding it. Okay, we haven't broken down from that either, which gives me no reason to say that this is bearish. Okay, the only thing that I can tell you is that I don't understand the price action. It's a range. I don't have to understand the range, but I have to understand how a range usually behaves. You buy at the range low, you sell at the range high. That's it. Where are we? We are at the range lows. So far, we are also an overshoot. It's a 3-drive bear pattern out of a bull flag with a pattern that is usually 60% of the time resolves in a bullish up move. Okay, it's a large structure here. No wonder, but 3 drives down, 3 drives down in range should result in an up move. Okay, so that's that. We have the 50%, which is a plus. We have the 3 drives down in a bullish environment. This is a plus. We are around the cycle timing window, which is a plus. The cycle isn't broken. This was just an extreme news event which caused it to peak early here, but I would suggest that this is probably the cycle peak and this is just a leverage flush out, right? Fundamental event. So the cycle should have like behaved this way, and now then it found a high due to panic earlier, and now we're just in a more extended down period, but that is not suggestive of a downtrend having started simply due to our timing band not being fulfilled. Okay, and this is a timing band where a left translation usually occurs. So another possible plus. We have good signs over here. Now there was the argument being made that demand is diminishing. Um, I would say supply is diminishing, if I'm honest with you. Look at that. How much supply came in here? And from there, it's just coming down. Sure, you have a pronunciation to the downside out of these legs, but they are all based on news events, right? News events don't make for trends. They just make for a spike, a volatility spike, if you will. But the trend still remains. So all the trend indications are plus. I don't have anything that would suggest that this is gonna just collapse from here. Nothing, right? Um, we can interpret the range, and so far, I would say you say diminishing demand, right? But look at look at the sell-off here. Look at the sell-off here, and this is what we're gonna get. And this large thing here is this. No, I'm not buying the bearish theory. Still, I'm. I don't think a president can manipulate the prices so much. Uh, I don't subscribe to that idea. I see it. I see the localized evidence, but this is not proof of a causation. Okay, they might have planned it. Maybe, maybe it is easier to manipulate a thin market. Maybe, but what if it's easier for them to push down the price because we're in a down cycle and the cycle is going to turn up and then none of it is going to have an effect? What about that, right? So that's why I'm still of the firm belief. Yeah, always open to criticism, but I think you get my rationale. Hopefully, it makes sense to you, and that's why I wanted to discuss that too. So that's oil. I think the detail in oil is clear. And now let's move on to Ethereum. Ethereum reached a lower level. We have a good amount of buying over here, but nothing that suggests buying afterwards. We have to see. So far, this is more or less what I want to see, actually. So we have good amount of extensions. It's at the range lows again. You can see here is a big SR level. Okay, it's gonna need time if it even wants to push lower than that, or maybe we found the bottom here, right? This is also possible. So yeah, I think we just have to wait and see. Maybe this is the target, and maybe it is not. So far, everything is suggestive of another push down, but it doesn't have to, right? We're at support. So maybe this is the low. We don't know. We don't know yet. The reaction isn't good enough for me to call out for a low, if I'm honest with you. If I saw that, that would be much more better. Um, it's weaker than this, right? And it's just sitting there. Here's all the stops. Is it gonna stop here? Let's see. Right. Okay, then Bitcoin. We are still right there at the range lows. Um, so far, I mean, we can go to the daily chart. It's good, but is it good enough? Is the question. I don't know. I think we need to consolidate here, which is what's happening, and I would still expect another leg lower. If it like turns here, this could be a good double bottom. We could do something like this, then go up and then come down again, and this might form a cycle low actually. But this is still not very early in the works. We have to see if this test is gonna lead to more downside or not. So yeah, I guess trade is over. You can take profits here if you want to. Uh, and then let's see. Yeah, it's our target. Copper. We're still holding as long as we're up, and as long as we can get above these highs, we will enter a bull market. This is a no man zone. That's it. Platinum, not really anything that I can tell you that is good. So let's just skip it. Gold had a decent reaction. It's not good enough yet to call for a low here. If at all, I would expect this one to get a meager rally and then come down again because there's still more time left. You can see my outlook. I'm expecting this to bottom here, but so far it's not enough. It's not enough of a reaction that I would believe it. Okay. Then we have the euro. Euro, decent reaction as well, but it's fading again. So if that is fading, I think we're going to reach the 114 level. So far, not suggestive of strength. You can see the 200-day moving average. It's now about to turn down, and that doesn't mean good things. And we got rejected by it here, and the reaction was decent, right? And now the support is less like the quality of the support is lower than the quality of decline that we had from the 200-day moving average. So that's why I would say the weight is coming down. Okay. All right. Then I think you have discussed most of the markets. Now let's get into our new addition. This is a new thing that we started. So let me just see where the list is. New, there you go. Okay. We have a couple of good candidates. Some of the trades I actually also announced. This is Abercrombie and Fitch. Good, decent push to the upside. I think this could lead to another push higher, as I suggested here. This might be the range low. Therefore, we have to see. So far, looking good, looking very good. IFS is another thing that I suggested. Good follow through on yesterday's day. I think it can continue higher, even though I don't like the close of it. So there is some selling coming in here. There was also a bit of selling here. So let's see if we get like a small test where we don't close below these highs above 52.83. So that would be the key level in the intermediate term. If we close below, the trade is off. If we hold above, it's good. ELF is another one. I think this could lead to a more meaningful uptrend. I don't think this is going to commence right from here. I think we need a bit of consolidation here as well. So this is more like a setup, not an initialized trade. Here, this is a very volatile asset. Nonetheless, it has broken out. And if it can hold above these highs, about above 15 now, um, I think it's gonna be a good thing. We need to test it, and now this is the reaction. You can see just this day, this is a 13% decline. So that's why I also suggested to use a lower size because the volatility is very, very high to handle. And if you have large position sizes, it's gonna rip you apart. And it's just a small reaction. So whenever it comes down lower, I think this is gonna offer the best risk to reward to enter. And then we have TBT. This turned down. This is the yield short. Um, because yields should go higher, but they kind of sharply reversed. Yeah, and now we're getting this follow through. The setup looks like it's off. We've got to see still if it's going to hold or not. Um, but I'm expecting still it to break out. 200-day moving average is just below us. Volatility is contracting. Therefore, let's see what we're going to get. But this is how it looks so far. All right. Until next time. Bye bye.